Investors and traders, welcome to the channel. Market chart pattern today is 23rd of March 2025. Hope everyone is having a great weekend. We'll be taking a look at the key US markets that we like to follow. As always, the video is for educational purposes only. It is not a financial advice. So let's start by taking a look at the gold market, because the gold market, in my opinion, is at a really key level. And this is the pattern that I had drawn when we did the previous video. And what we have seen is the market actually pulled back, not by much, but about $50-60 last week, in this majority of it coming from last Friday and Thursday. But I would like to point out is if you look at the long-term monthly chart, this is really long term, and I've got like several these ABCDs. Some of them are extended ABCDs completing in this region right here in this gray box, and the market is pretty much heading towards the hitting the boundary of it. It's just nearly there. So we are actually moving into some really key levels. It's a very strong market. The bull market has been going on since in earnest since 2002, and then we saw a peak coming in 2011, and then for the next 4 or 5 years, 4 to 5 years, the market actually went lower. So it was in a bear market, and the equities were really taking off. And then we saw a bottom come in late October 2015 to early 2016, and I recall stock market was having a correction as well, which finished in February of 2016. Excuse me. And then the gold actually just been on a rise, and more recently we have seen the gold really begin to perform really well from February of 2024. So one thing I would like to point out is, if we just look at this data which is coming from the CME group, this is basically the open interest and volume data, and here we can see there has been the open interest has declined quite a bit. Now that might be also because of rollover, and we have seen some additional contracts being added to the June contract. But one thing that I would like to point out is this is the commitment of traders report. This data is coming from barchart.com, and here what we have is essentially data going back about 20 years. This is of course the price chart, but right here we have a breakdown of managed money, or CTAs, or speculators, which is the green line. Then we have the blue line, which is the small retail traders perhaps, but they are still reportable, big enough. And then we have this red line, which is the professionals. These are hedgers, producers, and they're mainly purpose in the marketplace to hedge their positions. So this is what I want to point out is, if we just go back and take a look at the data, we can see some extreme readings that came in right here, which is right here. This is the 2016, January 2016. And what happened here is basically, let me get rid of this one because I'm not going to take a look at this. Oops, I have to start all over again. Oh, it's not letting me do that. So what it is basically, let me go back to the 20 years of data. And here what I want to point out is this here. Look. Here we had a condition that for quite a long time, the red line, which is the professionals, they had actually been buying the market while the prices were declining. They were accumulating. Then we reached a point where actually they flipped from a net short position to a positive position, and then they began to sell again. So they had done their accumulation and they were selling as the prices were rising, and then we saw a similar position right here, a lot of accumulation by them. So they started accumulating more right here, and then here we see they begin to sell after accumulating at lower prices, and we saw a big rally right there. And if we just take a look at what happened here in 2011, so they were actually buyers right here, but then they began to sell, and then we saw a nice trend, and this is where they actually began to buy again. And then it took quite some time before they actually began to aggressively buy, and the prices began to decline aggressively. Now, this is not a timing tool, but it is more of a conditioning tool. And here I want to point out right here what is happening. We can see that here we have seen in quite some time a big tick up. So it looks like they are beginning to reverse their position from or begin to lighten up their short positions and begin to buy, and the speculators begin to sell. So we have to watch this space really carefully. It looks like maybe in gold we might be actually at a point where we could see a pretty nice significant pullback happening. So this is just what I wanted to point out, what we can interpret from the commitment of traders report. Now let's take a look at the bonds. So let's take a look at the yields, short end of the curve, and let me go down to the daily chart. Here we go, and here what we see is, look, it tried to rally right into 38.2% retracement. Now it's just moving back lower. So yields on the shorter end of the curve, they're finding resistance. They want to move up, but they find resistance. So it's like, they're moved back into the trading range. In my opinion, I think we are going to see lower yields on the shorter end of the curve. And if we take a look at what is happening on the 10-year treasury note, we can see that it actually 2 consecutive days where yields have actually risen, but this is the market symmetry there, right at the 38.2% retracement. I think what we are seeing is basically a retracement right into this resistance, and the yields could actually pull back a little bit further. If not, then we might have seen some sort of a double top, a double bottom formation. I think the yields are likely to move a little bit lower, maybe to up to 4%. And if we were to take a look at this on the 10-year futures note, it's just the opposite. We can see the prices under pressure. We can even draw a trend line like this, and we have this triangle pattern like this. Here we go. So if the market, I think because it's still supported by the moving averages, it really needs to get above this resistance level for it to move up quickly, or the yields to fall quite rapidly. But it does look, it is supported from the moving averages right here, which is quite interesting because it has been a pretty big bear market, but since January or the beginning of this year, we are seeing a rally which has actually been a pretty strong rally thus far. Going into March, we are moving into the towards the end of March. And then finally the long bond futures, here we go. They are a little bit weaker compared to the 10-year because also longer duration, but the trend line is still there. They're kind of consolidating in this range, but momentum is not that great. It's being supported by 20-day moving average, but the price is below the 200-day moving average. It really needs to get above this 119, 120 level for it to, then we can think about maybe what we are seeing right here is a inverse head and shoulder pattern, and then on the longer side of things, this might have also been a formation of a inverse head and shoulder, head and shoulder. I think there is a fair amount of time symmetry in here, and it'll be really interesting if this market is doing that, because it's just been a pretty vicious bear market. So it'll be, the symmetry will be not exactly, I would have liked to see much better symmetry, but it'll be quite close. So we have covered gold. We have let's take a look at the dollar. So there we go. This is the dollar index. Daily chart is trying to rally. I think we could maybe see a little bit further strength moving into 104.25, because this is how much the previous move did. So the symmetry concept, and then we can see that here 103.75 with 61.8% retracement, moved a little bit lower. Now it's trying to rally a little bit. I think it's going to find some resistance around 104.25. That's sort of the region. And you know, if it begins to get below the 78.6% retracement, that's an early indication we might be in this big ABCD down, which could see the dollar move much lower, especially if it gives, if it takes out the 99 level. So we have to be watching this really, really carefully. Potential support in this region where it is right now, between the 61%, 61.8%, and 78.6% retracement. And we also have the 20-week moving average just slightly below this. Okay, so now let's take a quick look at what is happening with the euro currency, and here we go. We can see that as the dollar strengthened, and this one is actually stalling right at the 200-week moving average on the weekly chart, and on the daily chart we have this 1.618 expansion of this move, and very close to the 78.6% retracement. I think there is a chance it may go back right towards this region where we have the 20-day moving average. So I would see that perhaps there's further weakness to come in the euro versus the US dollar. And if we take a look at the British pound, right from the 1.272 expansion, it's finding some resistance. It could also pull back right into this region, which could be support. And if we take a look at the Japanese yen, here we go, and we can see that right from the 61.8% retracement, something we spoke about, it's finding some support, and it has rallied. There is a chance it could rally a little bit further, right towards the 38.2% retracement. So here we go. Yeah, right into this 151 region. That is also possible. The other thing is that you know, ever since this 11th of March is indicating strength in the US dollar. The interesting thing will be to watch what will happen with the stock market in the US. Before that, let's actually go and take a look at what is happening with the foreign markets. So we take a look at the Japanese market. And here you can see that still finding a lot of resistance from the 78.6% retracement, a little bit of a rally since the 11th of March. Now consolidating right here, but still, you know, yeah, it's the 78.6% has just capped any higher, moving higher for this market. Then if we take a look at, I believe it was Sensex, the Bombay Stock Exchange. So this one is really, really interesting because we discussed this market top in September of 2024. It has had a nice 15% correction, and now what we are looking at is this rally coming in right from the ABCD move, right at the 38.2% retracement. Now this should be a pretty strong rally, but we have seen a pretty strong move. This is where the 38.2% retracement comes in, right from these highs. I'm going to remove this one. If it begins to get above this, this is going to be really, really interesting, which could indicate, because the bearish market symmetry will be actually broken, if it is able to consistently for 2 days get above this level in a strong closing basis, that we might have you know, seen some sort of important bottom right here. It'll be really, really interesting what the market is likely to do, but you can see a really strong higher move in the Bombay market. And now let's take a look at the FXI, which is the Chinese market. It's the ETF, and here we can see it has pulled back right into the 20-day moving average. Failing that, I think it can fall right into this gap somewhere. And if we take a look at Hang Seng, Seng futures. There we go. So this is what we were looking at the other day. Really strong resistance, and the market has actually for 2 days quite a big pullback. closing below the 20-day moving average. This is not looking good. So I think the Chinese stocks like Baba, which are also listed in Hong Kong Stock Exchange, they might actually also come under pressure. Will be interesting to see the price action of those stocks. And then if we take a look at the German DAX, here we go. Right from this level, which was our target, it is just moving in a range bound fashion after completing this. And then finally, if we take a look at the FTSE 100, last Friday it closed below the Thursday's low, so I think this head and shoulder kind of pattern is there. Now if it begins to break below this swing low, then of course we are in ABCD, and then it could also mean that we could see all the way back to this market would come to 8,000 level to test the bottom of the range. That possibility is there. Now if we turn our focus to the US market, so take a look at the S&P 500. This is the S&P 500 cash daily chart. We can see that 13th of March, this is where the bottom came in. 10th and 11th of March for some of the foreign markets. We have seen a nice rally. It hasn't even come close to the 38.2% retracement thus far. Let's see how much the rally has been. So it has rallied about 3.8%, but let's see how many days it's going to take, because the chances are it could just be if there's an A, this is B, this could be point C, and if it takes this swing to the downside, then we are looking at big ABC down. The other chances are, and we'll begin to get the clues if this sideways move keeps on going for quite some time. So I would imagine, for example, 14 days, 16 days, so that's nearly 3 weeks in the markets, then it will be a sign of a lot of consolidation, and which will strengthen the case for this bottom, and then we could see higher prices, but then we'll have to watch for further resistance levels. So the market has come down really quickly and retraced about 10%, more than what we saw here in back in August of 2024. But it's also hitting the 61.8% retracement, and so is the NASDAQ as well. So we have to pay real close attention to these levels. And here we go. This is the weekly chart. So the 61.8% retracement and this swing low of 13th of March is really important. We could see at least a bounce. What I am looking at, calling it a bounce thus far, to continue. And if the strength comes in, then we might have seen an important low, and the market will retrace and make a recovery high quite a bit, which would actually weaken this move, because if it is a really strong move, then it should not get much above 38.2% retracement at 50% level. And then we could see an ABCD to the downside. Otherwise, if it just consolidates right here, because of the power of the 61.8% retracement, the symmetry nearby, and all major indices making low in unison for the US markets, that will strengthen the case for the bulls. Now let's just take a look at the NDX, which is the NASDAQ 100 weekly chart. You can see support coming right in from the 61.8% retracement, and then if we take a look at this right here, you can see that it is just consolidating right here into this in this range for quite some time. It is far away from the 38.2% retracement, so maybe if it just keeps on consolidating right here for another 14 days, well, it's been another 10 days for example, I think that would be quite a lot of consolidation, because if it is a really sharp move to the downside, then I would have expected this to start quite quickly, but thus far it's just consolidating. Maybe market is waiting for something, but this low of 13th of March is really important, coming in right at the 61.8% retracement, which has provided pretty good support for the market. And now let's take a look at the Dow Jones. Here we go. Let me actually move to the weekly chart. So there we go. Retrace about 50% of this move. Inside bar formation. Yeah, finding some support. Whether it's gonna be held, we'll have to wait and see. But again, 13th of March low is really important. Now, Russell 2000. This is the real important one because this is the one which has actually suffered quite a lot, and it's just trying to rally here, finding some support. And here we go. There we go. So it tried to rally to 38.2% retracement, but it's just not able to get there. So yeah, I mean, the scenario we are looking at, really sharp move to the downside. S&P 500 down 10%. Now 13th of March low is really important. Major indices getting right to the 61.8% retracement in the NASDAQ cash index, and then also S&P 500 cash, and this one Russell 2000 futures 78.6% retracement right here. So we have to watch these levels, the low of 13th of March, really carefully. And then if the market is really weak, I don't think we will get much further than anywhere between 38.2% and 50% level. Then we could see a strong move to the downside. However, the market begins to encroach much higher into these boundaries, then it means that the market is getting bid. So really interesting week coming up for us. I think the price action will tell us quite a lot whether this low that we saw 13th of March is likely to be held, or we begin to see another corrective move to the downside. So really key price action coming up next week, and of course I will keep on making the videos and keep everyone educated in terms of the patterns that we are looking at in the market. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.